Looking at sort of the behavior, of this volatile thing we call the housing market, what are some of the factors that you look at?
Well, obviously interest rates. Interest rates are playing a huge role in the market right now, and obviously people tend to pay quite close attention to what's happening in the stock market, and that's been kind of moving around in some unfavorable ways as well.
Something that's very interesting. I think it's all, any discussion ever of what's going on in the housing market here, we just cannot help but kind of look over our shoulders, and they're not in great shape in the U.S. and they seem to be sort of not bouncing back in a way that was anticipated. They're just printing money down there, like just madly all night. There's people up all night long, seems printing money, and so how does that not ultimately have a drag on the economy, on the housing situation here, given that we're a huge trading partner and the economies are linked?
Yeah, it does. It obviously hurts our job market because our economies are so closely linked. So when their economy slows down, then ours does as well, to some extent, and then our hiring slows down, and obviously it ends up impacting our housing market as well. Sometimes, though, bad news south of the border or bad news internationally can be good news for our housing market, because it does tend to drive down interest rates, and when interest rates remain low, obviously people remain interested in housing. We do expect that interest rates will remain relatively low. I mean, even though interest rates have risen, and we do expect them to rise gradually, they're pretty much at historic lows as well.
And I mean, this is the thing, I guess it depends on your age, but I remember a time when interest rates were double digit.
That's right. Yeah.
It's a whole different world.